Okay, so I'm gonna share my screen so so we could start our presentation today. All right, today we're going to talk about the different discussion of key points from what are the most common strategies in retirement. We have the 401k, we have the Roth IRA, the individual retirement account, and also an alternative is an index universal life. So the discussion points are the following. We will explore the tactics for maximizing the benefits of a 401k plan, including contribution limits, employees matches, and let me see if I'm sharing my screen. Okay. All right. So, and also we're going to talk about the tax filing deadline. So those are just the things that we're going to explore. Okay. And then we have also to delve in the unique features of the basic benefits of Index Universal Life and the Roth individual retirement account. By the way, if you would like to watch this replay, if you cannot watch it right now, it's going to be available on our YouTube channel at Chris Y Coco. And when you join our subscribe on our YouTube channel, you have a chance to win our on our website. At the end of this questions workshop or live chat, we will do a Q&A. All right. I just want to remind everybody that this material has been prepared for informational purposes only, and it's not intended to provide and should not be relied for any tax investment or legal or accounting advice. Examples and other materials in this webinar are only for illustrative purpose and should not be relied upon for any technical answers. Because YCO Tax is a virtual outsourced accounting and wealth planning company, and YCO Tax is not associated with any institutions on this presentation and is a private business providing resources for small businesses. The people that we encourage to attend are people with businesses, self-employed, work from home, people that have 1099s, S corp, LLCs, partnerships. If you're falling into this category, non-accountants, and then high income professionals making $90,000 a year. Because so far, IRS, way back 2022, IRS is hiring 87,000 new agents to audit small business owners. So you have to avoid trial and error approach from your retirement contribution to your tax filing and planning. There are only three different buckets of taxation. There are taxable now, which are the 1099s, and also included your W-2. There are also tax deferred, which are you call it traditional IRA that's going to fall into the middle. So these are also included self-directed IRAs, 401k, 403bs, and then annuities. And then the last part of your tax sheltered account is what you call tax-free. This includes Roth IRA, municipal bonds, and CV or cash value life insurance. So these are the three things. And what you call if which bucket do you prefer or and also do you like paying taxes? So answer it below, because there's a strategy called diversification. We're putting your eggs in different baskets, for especially for people that have full time. You need to know what other products you can allot your money, park your money that have tax deferred or even tax free. So the tax deferred specifically are the 401k. Roth IRA is more like tax free. The benefits of the following from the 401k and Roth IRA flexibility, it offer a wide range of investment options to suit various risk tolerances and financial goals. Tax benefits number two benefit are more like tax. Contribution to a traditional 401k are tax deferred, reducing taxable income now, while Roth IRA contributions are made with after tax dollars. So you already paid tax on it, but withdrawals are tax free when you retire. Then make the most what you call the employer match. Make the most out of it. Many employers, hospitals, other big companies, tech companies, many offers employers offer matching contribution to 401k plans, effectively giving you free retirement towards free money towards retirement. This is also a way of retaining your employees. So if you're a doctor and you have employees, this is the best way to retain your employees more than the salary that you're giving to them. The drawback for these two type of product from the 401ks and Roth IRAs, the early withdrawal from 401k and Roth IRA, when you say early withdrawal, 59 and a half years old, when you withdraw this money before 59 and a half, there are usually 10% penalty, and that also subject to taxes. So that's the consequence. And then number two is the market risk. Investment in a 401k and Roth IRAs are subject to market fluctuations, which can impact the value of your retirement savings. So now the other product, and this is also not dependent from the employer, is what you call the Index Universal Life or the IUL. So the benefits of it are the following. There's a lifetime coverage. So the Index Universal Life has three features. Again, this is more like a life insurance that has cash value. It protects the family in case the head of household, maybe the mom or the dad passed away. There's a instant death benefit to the family members. Number two, there's what you call living benefit, which means up to 90%. Let's say you got a 1 million policy, up to 900,000 or 90% can be used in terms of medical, hospitalization, treatment, those kind of uh, medical expenses. The reason why, what do you call this? Especially when you go in here in the US, why is living benefit important? A lot of one of our clients in New York, she was so healthy, was a nurse practitioner making $250,000 a year, and then she had an incidental finding of cervical cancer stage 4. So is she capable being absorbed by the company, by her hospital to continue working? Of course, there's a limit on the health insurance that can cover. So basically, the living benefit up to 900,000 can be used for her treatment without going to GoFundMe and having a financial burden to her kids and to her husband. So that's the reason why you want to have a living benefit from an insurance. And also, like people, oh, I have my health insurance, but the question is, how long is your company going to provide you an insurance? If your treatment when you get diagnosed with cancer will last for 2 or 4 years, do you think you're still going to be employed by the employer? They will stop the insurance, the health insurance. So therefore, you have this alternative income replacement for those treatments. So that's the number two benefit. And the number three is what we said, cash value, which we will go here later on. So number two, the tax advantage growth. The cash value component of the IUL policy grows tax deferred, and policy loans and withdrawals can be tax free if it's structured correctly. So you need to remember the word. Not all IUL people that selling this are savvy on how to structure. So you have to rely on somebody that have been doing this full time and have been so many years doing it. Okay. And then number three, market link growth. The cash value component of the IUL policy grows tax deferred, and policy loans and withdrawals can be tax free if it's structured correctly. It's like the same market. The market link growth, they have more, this kind of policy, they have more protection. They have a cap, which means you don't lose that much money. So you don't your investment will they're always like a flooring, somewhere like 3.25%. It doesn't lose your money below 3.25. So those are just example. And then you also have flexible premiums. The cash value component of the IUL policy grows tax deferred, and policy loans withdrawals can be tax free. My God, it's just repeated. What are the cons of this? The IUL policies are complex financial instruments. I always tell to my client to check the various fees, caps, and participation rates that can be difficult to understand. The performance risk, while the cash value can grow with the market, it's also subject to caps and participation rates, potentially limiting upside gains. Yeah, I mean the thing with the life insurance is still life insurance, but under the article on the IRS, when you put your money here, it's protected from any growth of the money is protected from taxation. However, it also has a ceiling on the potential growth of the money from the premium that you're paying. And then number three, check on the surrender charges. Withdrawing money from the cash value or canceling the policy early can result in significant surrender charges and penalties. So what are our takeaways here? Number one, each option has unique benefits and drawbacks, and the best choice depends on your individual financial goals, risk tolerance, and overall strategy. And number two, present to your financial planner your current investments, insurance, debts, income, mortgage expenses. This will provide a financial blueprint and create a financial roadmap. Then three, your business is a great leverage on increasing your cash flow and investment, but not your taxes. Then number four, tell them what would be your next plan on next 5 to 7 years, like going to school. Are you going to buy a new house, moving to a new company? How many dependents you have, including parents and extended families, especially immigrants. We have a lot of extended families outside the US. So that's the reason why YCO Tax is here. We are an all year, all round wealth and accounting plan tax planning service solution. We want you to have a peace of mind, save headache, save time, save money, faster access to grants and loans, especially a lot of healthcare workers or high achievers. They are busy growing their business and also growing their career. So that's why you need to have partners like us who can give you a financial blueprint. And since it's tax season, we are open now for tax filing, tax planning, and then even the record keeping because we are worry free year round, competitive, and on time. That's why entrusting your business to YCO Tax will give you a peace of mind. For the tax pizza savings chart, how we approach are the services covers that our services cover the following. These are the six framework that you need to understand, but we convert like a pizza, six slices of tax savings pizza chart. We review your business entity. It's very important, whether S Corp LLC. We also review the blueprint of your income and expenses or financial records, your balance sheet, profit and loss, cash flow. And then number three, slice three, this one, because all your personal, when you have a business, that's the value of have running your own company is you can convert from personal to business expenses. That's also part of our pizza chart, whether you're using your personal car, using your home, there are home office deductions. And number four, there are different type of business tax credits that we are partnered with. These are the tax credits specialists that they will find, whether it's R&D, research and development tax credits, opportunity zone when you're purchasing land, or maybe solar energy. Those are the different popular research tax credits. There's also art collectors credits. Then, if we still have remaining money on your bank that you want not to be subject to tax, that is where we're going to park your. We have a tax shelter plans. We also offer it. We have trusted partners that can design your 401k, your annuities, and IUL to be covered by the business. So anything that you spend, anything that you park your money in the retirement is also giving you a tax deductions or offset your taxable income in every year. And then lastly, our team also will do the filing for you. So these are the six slices of tax savings pizza chart that we offer. For your 2024, we have a one-time offer when you go with us within the next few days. We are going to offer $523 off on when you package your bookkeeping and tax filing and preparation to our company. And you have a 3-year audit assistance when you avail these services. You have a dedicated virtual accountant, and then we will take care of your 2024 bookkeeping and tax preparation, then we will create a quarterly tax savings pizza pie chart. All right. If you want to know more, feel free to connect with our company. You can find me on LinkedIn, Christopher, Chris Waikoko. You can find us on YouTube, Chris Waikoko, Waiko Tax on our website, and also on our Facebook group. So you can find us everywhere. We're not going anywhere. And right now, we are offering a free 30-minute consultation. All you have to do is you can type free at our number 956-425-9926. Again, it's 956-425-9926 for further questions, clarifications to any of our services. So stay tuned. We're going to do this another live on the fourth Tuesday because we do it second and fourth Tuesday of the month. So we're gonna do that on the fourth Tuesday, which is February 25, 9 in the morning Central Time. Again, I'm Christopher Waikoko, your IRS acceptance agent, financial planner, and also tax professional because